Morning, Steve Free in Chicago with the morning grain comments. Hope everybody had a nice and safe weekend. Certainly a lot of news outside the grain markets concerning Afghanistan, the virus spread, and just what the Fed Chairman Powell might say at the town hall meeting and what they might say as far as tapering when we go into the Jackson Hole meeting. Just kind of wondering if there's enough positive U.S. economic data for them to begin talking about tapering later, either in 2021 or early in 2022. Overnight, kind of a mixed trade. Beans up a little bit, corn unchanged, wheat is trading higher. Stocks are lower, dollars higher, and the crude is lower. This week, we have the Pro Farmer Crop Tour that goes through the Midwest and tries to either confirm what the USDA said in their August Farmer Survey report, or maybe find some different type of yields. It's always an interesting tour of whether you walk into the field at the right place and whether you take the correct data, and soybeans are impossible to get a yield on it, but we'll just see what they have to say about the differences between the Western Corn Belt and the Eastern Corn Belt. We'll also be watching pretty closely some of the technical aspects of the marketplace. Again, funds are not long as much grains as they had as far as record positions are concerned. And we'll see if they want to buy into this market in front of the harvest. It seems like we're somewhat range bound in that it's really hard to break beans 20 to 30 cents. The farmer would stop selling, and the end consumer, though, could step in and start buying. We just don't know what the Chinese demand is going to be and what demand for protein is going to be. The crush NOPA crush should be lower than last year, and soybean oil stocks also near 9-month lows. Over in the corn, again, it's hard to break because the farmer won't sell. It's hard to rally because he will. And so we have to kind of see what type of trading range we're going to pull off going through the harvest. And the harvest should start late in August and pick up in September. For the wheat, we continue to add premium because of the lower world exporter stocks. And so when we look at 21-22 private guesses of carryouts versus the USDA, most people are using beans at 125 versus 155. A billion carryout in corn versus 1242, and a lot of that is a higher export number, and 550 in the wheat versus 627. And again, most of that is less imports, and also the fact that the crop might be smaller. For 22-23 wheat, we need more acres, and even if we have a crop of 1925, the carryout could be as low as 430. So we'll be watching the wheat market as maybe the leader now if it takes out some of these important resistance levels that are above the market. From a weather standpoint, in the next 2 weeks, we're going to see scattered showers across the Midwest, warm temperatures. And then I think after that, the rain kind of dissipates, especially in the Western Corn Belt, Northern Plains, and temperatures turn warmer. As always, these are my thoughts and not those of ADM Investor Services. Have a safe and profitable trading day. And remember, always treat people like you yourself would like to be treated.